Mayuresh Joshi now joins us now. He's the head equity research at William O'Neill. Mayuresh, it's been a big fall after what was a huge rally. In this fall, if one believes that the uptrend is intact, what are the pockets that look interesting?
Afternoon, Mangalam. I think a large portion of the market was of the belief that the broader market rally that we had probably seen, there would be some element of profit booking which will come through. And it seems to be the case at this juncture. Having said that, I think where the earnings trajectory is expected to still hold out, our own sense at Marketswatch India is when we probably look at our EPS and RS rating structures, auto ancillaries as a pack very selectively probably look very, very attractive even now, and with the fall even more. Mid-cap IT, again, very selectively looks both a defensive bet and where the earnings outlook probably might continue over the next few quarters. And a few of the names within the larger basket of capital goods, because this is one theme which will continue. Its earnings pedigree, good execution happening on ground. We are probably entering into a good phase where the capex, both from the government and the private side, will continue for a longer periodicity of time. Albeit the next 2 quarters, because of general elections, there will be a slowdown in orders. But the existing order books are good enough with the execution that they are doing, expecting good operating leverage to play out here as well. So I think these 2-3 pockets looking a little bit more interesting, Mangalam, as we speak.
Okay. I wanted your thoughts also on the auto names, because there's been a big comeback over here, especially in some of these rural plays like Hero MotoCorp, because of increased demand due to the wedding season, etc. Do you think there's still more to go on the upside for the auto companies?
Afternoon, Sonia. I think that seems to be a possibility, because what you've probably seen in terms of volumes and the product mix that a lot of these two-wheelers have, specifically case in point being TVS Motor, has been a huge outperformer, both in terms of its original product on the original product doing well and iQube doing equally well as well. Having said that, again, I think the kind of valuations that these companies are now trading at, a tad bit higher than long-term means. And therefore, I think the expectations that's getting built in view of competition, expectations of two-wheelers and the existing two-wheeler players in the unlisted space, some listed offerings expected to come through in the next few quarters, might bump up the overall valuation picture for this space. So the space is attractively poised. Valuations had bit on the higher side. As a disclaimer, we continue holding on to a stock like TVS Motor into our global portfolios. But auto ancillary, Sonia, as I mentioned, look very attractive. Our sense is battery makers, case in point, Exide, Amara Raja, probably look reasonably placed both in terms of both the internal combustion engine batteries that they're providing and the additional capacities that they're probably building up, which is expected to come up over the next few quarters. Input costs have come down sharply, which means margin stability can be expected. So to that extent, earnings growth should hold out very comfortably for these battery makers, and the transition will be equally good, both from original equipment manufacturers and the replacement markets. So I think battery makers is something that we like, but one can continue holding on to two-wheelers, specifically TVS Motors, where the disclaimer I'm from.
Today's listing, DOMS continues to hold up pretty well. Stock is still up about 68%, just shy of that 1400 rupee mark versus the issue price of 790. Between Flair Writing and DOMS, Mayuresh, which one would you prefer and why?
Afternoon, Rima. So I think I saw the tweet that Mangalam had put forth, and I completely agree with him. If you look at Flair's DHRP, or even if you look at Link's presentation, where they've put out the industry size. So the overall industry size, including pens, pencils, highlighters, stroke markers, as on FY23, stands around 6,600 odd crores, expected to grow at a blended basis around 7.5% to around 9,500 crores, where pens would probably be around a large part of the market share, highlighters, markers around 750 crores, and pencils should grow from around the 1,800 crore market size to around 2,500. So I think a large part of the market is being dominated in these spaces by either Link Pens, by Flair, or DOMS. But the kind of expectation that one has post listings, I think they are commanding a market cap which is in excess of the overall market size itself that the market itself has to present. The stationary market, I agree, is far larger. And therefore, I think the expectation in terms of whether these earnings will hold out with the market share that these guys have might be a probability, but valuations are too steep, in my opinion, at this juncture. So I'll have to wait out for a significant fall on these stocks to probably have a better entry point. At these prices and valuations, it does not make sense.